Welcome back to my channel, Balance Sheets Matter. Today we're going to be doing a little update on Charter Communications because I've got a lot of requests for it. Well, I've replied to people in the comments and explained some basically rationale of the update. I feel I should do a video to explain a little bit further and also get into a little bit of my overall little methodology and philosophy of investing overall because this applies very well to something like Charter Communications. So why Charter Communications has basically dropped can be summed up very simply. Here's a little snapshot in my previous video I did, and the thing is I'm showing what the analyst estimates were, and they were expecting basically the end of 2024. They were expecting $41 per share EPS, and that has now dropped considerably. You can see where it's at right now, end of 24. They're now expecting $34. So the stock has dropped quite appropriately considering that drop, because that's a very large markdown in EPS. So the stock is dropped as well, and then it's expecting to kind of be a little bit slower and then slowly tick up. And that's basically all that's happened. And this gets now into a little bit of my overall philosophy of the stock. Well, I do look at analyst estimates, and the reason why I look at them is because the people doing them, they have more insight. They're spending a lot more time looking at these individual stocks than any retail investor basically possibly can. It's usually their job to look at, you have someone, an analyst, looking at a handful of stocks, trying to estimate numbers and this and that. And let's just go through a few articles which kind of explains why this decline is. So basically, Charter loses 250,000 video subs in Q4, partially driven by the Disney dispute. I don't know if it says it exactly in this part here, but they estimate it was 100,000 was due to the Disney dispute. But now, luckily, they've struck a new deal with Disney. Disney Plus is going to be bundled in Charter's core video, and they're going to be getting rid of a few other Disney channels kind of in exchange. And even despite this, they're actually still doing quite well in video compared to competitors like Comcast. They've actually now surpassed Comcast in video subscribers. So this is also getting into telling me, basically, this is just an overall thing that's happening in the industry, in the broader market. You can see here another article, Charter stock gets another downgrade with weak numbers that are difficult to explain. What does that really mean? Well, the analysts really actually don't have a good explanation for it. They just kind of are like, well, things are describing, you can't really explain why it is. So they've gone from basically, at least as one analyst, expecting 150,000 new net additions in 2024 to basically losing 100,000 in broadband. So this kind of explains why there's that very large EPS change, very large drop. And why this is, there's some talks about the ACP program. It's kind of up in the air. People don't really think it's going to be renewed. It may be. That would be kind of a big positive upside. But overall, there's really not a lot of explanation. As you can see, a company like Comcast, a competitor, they're basically losing subscribers too. So this gets into, well, why is this? Well, I personally just think it's kind of more overall on the broader economic issues. There's a lot of inflation going on. People are having affordability problems. There's been what I've kind of described many times as a rolling recession since the implications of basically 2020 with all the supply chain disruptions, the free money given out, a lot of disruptions to the economy. And we're still working through all those issues. And it's kind of like Netflix. Netflix, basically, they were $700 a share. They dropped under $200 from some minor, basically, subscriber declines or plateaus for a short period of time. But then as soon as that kind of solved itself, that plateau, and they worked through that and they started accelerating again, well, their stock has rocketed up and they're doing very well. I'm happy I bought Netflix. Not exactly at the lows, but, pretty near the lows. So I've done pretty well on Netflix myself. Not saying Charter is going to necessarily do as well as Netflix. It's going to depend on their actual performance. Are they going to be able to kind of get back to those video estimates before? Maybe they're going to reaccelerate to those growth numbers again. Maybe they're going to be growing at a much slower pace. Maybe they're going to be flat. I don't know. I just kind of get into now what is my overall more philosophy on stocks. I kind of just try to look at stocks that are overall good quality, stable, growing, improving financials that don't have major deterioration. You take something like NSC here, and let me just get the little brush here. And basically, overall, this is just up and to the right. Shareholders, if you've held for a long term, have done very well. But there's been dips along the way. And during all these dips, there was always a big reason, always a big concern of why the dip happened, what the story was around it, are they going to be able to work through it? But if you had bought all these times when there were some minor problems, because stocks do not go down in price unless there's basically some problems going on. But if you bought it, you would have got above average market returns because you would have bought the stock when it was pretty significantly undervalued and then got this overall appreciating gains and made some money on buying it undervalued as well. So that kind of gets into overall what I try to do in the stock market is identify that. And that's why I go through the financials, because I like to go and basically look at and get an overall view of the picture of where the stock's going and really just try to avoid if I see anything that's to me at least, very obvious deterioration going on that could indicate there's problems. So for example, we look at Charter Communications here. You take up the gross margin here. Guess we can go a little bit shorter time frame here. Gross margin overall, I think I should get rid of the price here just to make it a little bit more clear. Let's shorten this up here. Gross margins have been going up. Net margins are going up as well. Net margins are going up. And operating margins are improving as well. Overall, basically, all aspects of the company are showing overall improvement. And this is in sharp contrast to another stock I've covered, Lumen Technologies, formerly known as CenturyLink, to where we can basically go to the interactive chart here. And it's like, we can look in the financials. It's just easier and more visual to be able to see this in a chart here. And so let's bring up all those again. Let's look at the gross margin. You can see there's been deterioration happening for a long time. This collapse of Lumen Technologies did not happen overnight, and this is what I go over in my analysis about it. There was serious fundamental deterioration happening on all fronts for quite a while, and I am not seeing that in Charter Communications. Is kind of what basically the summary is, and if you look at my previous analysis, what it is. But you can see basically operating margins have been going down as well. And let's bring up the net margins. Net margins also going down. Let's try to see that a little bit clearer. The net ones, you can see this didn't happen overnight. There was a long-term deterioration. There was some very fundamental issues happening. And even if you go to the EPS with estimate here, there was also EPS deterioration happening for years and years and years too before they really took this last big fall, which I do not believe, or I do not see at least, that there's any deterioration happening with Charter. You kind of look at Charter. I'm not going to rehash all the different financials I've gone over before, because in a quarter or two, there's not a lot of significant stuff that changes. But the revenue is growing. You compare them to other competitors like Comcast, and they're a lot lower revenue, basically. So they have a lot of market share to still potentially gain. They're only at about 54 billion here. Comcast, if I showed you, they're basically at, I think, about 122 billion. But you can see, like I said, gross margins going up, operating margins going up. This is an overall expanding business. You go read into the investors' relation. They're planning on expanding internet broadband basically to more rural areas and build more infrastructure. It's a business that, from what at least I see of what basically the management's planning on doing and what the overall financials are basically reflecting, they're a business that's trying to expand, and right now it is just not a good time for their overall industry because everyone's having these problems. So just another thing I kind of want to bring up is then on the valuation, I'm looking for basically good deals for stocks, and one of the things is price to sales ratio is a nice thing to look at because it kind of smooths out what could be a PE. And you can see right now the price to sales ratio, while I was interested in before, it was still pretty attractive, at about 1. This wasn't the lowest it's been before in the past, but it was pretty relatively low compared to history. And now it's really kind of dropped down to what has been the former near all-time lows. Can it go lower? Yeah, it can, but this is when I start considering the stock quite attractive. And we can compare this to a competitor like Comcast, which actually has very, very similar operating margins. I think Charter is actually starting to beat them a little bit now, but they're both around 20%. So they're very comparable in that line, though Charter Communications doesn't have as much debt leverage compared to or Comcast, I should say, doesn't have as much debt leverage compared to Charter, but that can kind of be changed as Charter grows in size over time. And you can basically see, what's happened over time. These are actually two companies that probably should trade fairly similar in they're basically ratios. And you can see when things got a little bit overvalued, charter price didn't make sense. And I wasn't buying it here. I wasn't like, why would I buy it up here? This is very, very expensive for what they are. And, the growth estimates they were expecting and the price you're paying didn't really make sense. Down here, yeah, there was aggressive growth estimates, but the valuation was still much more attractive. And then when things were, not as well, kind of right after the Great Recession there of 2008, 2009, and 2010, 2011, 2012, where there's still a lot of economical problems. Well, Charter Communications was trading at a pretty substantial discount, Comcast, and that's a little bit more starting to what's happening now and expanding as well. So that's just really the update. It's just kind of looking at the long-term prospects, and is Charter Communications at some point the economy is going to improve, the industry is going to improve, and things are probably going to start going as normal. Is that going to happen this year? Is that going to happen next year? Is it going to take more years? I don't exactly know. Again, you can go back to NSC here, and maybe you get in too early, like at 2000 there, where they were really, really, really low. And for a while, things did not basically pick up very much. You're probably, well, relatively to the market, as we know from 2000, 2003, things were not doing over well, but it's not like NSC was ripping up in price. But then in the longer term, if you had bought any time down here, you had done very well because they overall had good fundamentals. The company wasn't deteriorating. And this is my overall belief process in Charter Communications. And so are things going to potentially rip up right away? Well, if they start having if the ACP stuff is renewed, that would be good. Or they start showing better numbers, they could rip up. They might be able to support here. They might go down lower. I don't really know, but at some point, I believe they will kind of resume an uptrend because the overall company does seem to have good fundamentals, doesn't seem to be having any major deterioration. And I believe from a very long-term perspective, as this is why I'm always looking at charts that are 10, 20, 30 years, is very attractively priced. So anyways, I hope that gives you a little bit of an update on Charter Communications, a little bit more my methodology on basically investing and how I just look at things and the philosophy overall. Of course, make sure to subscribe to the channel, like the video, and I'll see you in a new stock analysis video.